I'm Randy Bongard with Price Mortgage, your loan officer. The initial set of mortgage disclosures are now available in your investor portal. The investor is the company that will be funding your loan. I want to take a few minutes to explain several things. The initial set of disclosures are a really big package of documents, like 50 to 60 pages. You can read everything if you want. However, you'll have plenty of time to do this after. You have to sign electronically in approximately 20-25 places. The system will point you to each and every place that you need to sign. If there are two of you on the mortgage loan, both of you have to do this separately. When you get to the HOI homeowners insurance part, enter the name of the homeowners insurance company that you'll be using. If you haven't made this decision yet, just enter TBD for now. This is enough to move to the next page. The disclosure that you'll focus on most is the LE, the loan estimate. The most important thing to know about the LE is that all of the figures are preliminary at this point. They're all estimates and mostly high estimates. If we underdisclose, we have to eat the difference. Your earnest money deposit amount, if doing a purchase, won't be accounted for on this initial LE. If there are any seller concessions, again, if doing a purchase, these won't be shown on this initial LE. So don't get too caught up in the figures at this point. They'll all get corrected and or adjusted at the end. Note, the figures are not finalized or balanced until after final loan approval is issued. This is done between the investor's funder and the title company, the escrow officer. If we have information wrong, please let us know. We'll fix it so that it gets accurately reflected on future LEs that are sent out. But you have to sign this first set of disclosures. Here are some specific things to pay attention to on the LE form itself.
In the loan terms section, the interest rate may or may not be locked yet. We'll notify you when we lock your rate or when you tell us to lock your rate. The monthly principal and interest payment does not include your escrows for real estate taxes and homeowners insurance or mortgage insurance if applicable. In the projected payment section, this gives you your estimated total monthly payment amount. The estimated taxes, insurance, and assessments figure is included in the estimated total monthly payment figure. In the cost at closing section, this tells you the estimated total amount of money you'll need to close. As mentioned previously, this does not account for your earnest money deposit or any seller concessions, if applicable, on a purchase transaction. If this is a refinance and you are getting money back or taking cash out, the to borrower box will be checked. In the closing cost details section, Section A, this is where you'll see what you're being charged to get the interest rate chosen, or if this is a negative number, this is the amount of credit you'll be receiving to be applied against your total closing cost. Section B, the appraisal fee, if required, will be paid directly to the appraisal management company when ordered. So this will be deducted from your total closing cost, unless arranged to be paid at closing. If you're doing a FHA loan or a VA loan, the UFMIP for FHA or the funding fee for VA will be shown in this section. You don't pay these fees out of pocket, rather they are added to your loan amount. If you see a final inspection fee here, this would only be required if the appraisal came back subject to, and we had to ask the appraiser to go back out to the property to confirm the work called out in the appraisal has been completed. Section C. These are the costs for the services you can shop for, although practically speaking, the borrower rarely does this. On a purchase transaction, the real estate agents usually pick the title company, and on a refinance, we normally pick the title company. However, you certainly can if you would like to. Section F. Homeowners insurance is always paid as an annual policy. Prepaid interest is calculated from the day of closing through the end of the month. Section G. They always collect a few extra months for homeowners insurance and real estate taxes to make sure your escrow account is always a little ahead. Section H, owner's title policy. You do not pay this on a purchase, the seller does. This will be adjusted when they balance. This is where you'll see any HOA related fees. In the comparison section, APR, annual percentage rate, includes your interest rate plus certain closing costs expressed as a percentage of the loan amount. So the APR will always be a little higher than your interest rate.
Please let us know if you have any questions or if we can do anything else for you. Thanks.